As a beginner in the crypto market, it can be very difficult. You don't even know where to start. A lot of us just buy crypto without even monitoring or knowing the position of the market. I once was like that, but now I'm more experienced, which is why I've decided to enlighten you in this video and give you tips and clues on how to operate the crypto market. So make sure you stick until the end of this video. But before I continue, take a moment to give this video a like and a subscribe if you find it useful for yourself. Now let's dive in. The reality is that you have to look for utility or the value of any investment that you make. You have to say, why are people buying Bitcoin? In reality, Bitcoin, just like an NFT, is a digital version of art. We compare it to the Mona Lisa. Bitcoin is a digital version of gold. People say gold, real value, is jewelry, but nobody needs gold jewelry. People just like gold jewelry because it keeps the shine. There's a lot of good reasons we love gold as jewelry, but if gold jewelry went away, the world wouldn't change. And there are a few manufacturing applications, but gold has value because people assign it, and those types of investments are called store value. They're more like commodities. Bitcoin is the same way, it just happens to be digital. It's limited by an algorithm, how many that are created, so there's also a scarcity factor. You can't just create it forever. So because of that, and because it's safer to transfer, it's easy. In some cases, they use it for cross-border payments between people in different countries, so that's some utility. But mostly people buy Bitcoin and own Bitcoin like I do because other people own Bitcoin, just like people buy gold. Now, you'll hear a lot of stories like Bitcoin is a hedge to inflation, gold is a hedge to inflation. It's not. We're having a lot of inflation right now, and Bitcoin and gold aren't going up. They've bounced around pretty much where they were. And so you have to understand, if you're buying Bitcoin, it's a store value. And like any store value, the price is based on supply and demand. When more people are selling and buying, it goes down. When more people are buying than selling, it goes up. And so this is a whole lot different than the stock market. Take a look at the tech stock, for example. It's gotten crushed worse than Bitcoin and Ethereum. Now, Ethereum is a little bit different. It has some level of utility where you can use it for transactions. If you're familiar with NFTs, you'll notice that most of them are bought and sold with Ethereum. So in order to buy Bored Ape for 100 Ethereum, you'd have to go and buy that Ethereum. So the more demand there is for Bored Apes or the Ape coin or whatever NFTs, the more value the Ethereum token is going to have. So when I look at any of my crypto investments, that's the first question I ask. What's the core utility of the investment? What value does it serve? Which is why I own more Ethereum than Bitcoin. With that said, when tokens like stocks have some level of speculation in them, people who aren't long-term investors, they're just wanting to buy because they think it's going up. And so when the market loses those speculators, as we're losing them now, interest rates will go up. And as a result, stock prices will go down. Amazon and Netflix have gone down more than Bitcoin and Ethereum, but that's just the way it goes. You have to understand the market. Now, what I'm going to try to check if there's anything that's gotten so cheap that it's time to really take a long, strong look at it to buy some. When Ethereum comes down to around $18,000, I'll buy a little bit more. When Bitcoin comes down to $28,000, I'll buy a little bit more, just because it's really hard to predict how long it's going to go. So I haven't gone all in. Now, let's look at Dallas and say, how can they change how people do business? And one of the big things that are happening right now is that employees are starting to get a little bit of traction and having an impact on the company that they work for, because at least as of now, there are more jobs than there are employees, and it's not hard to leave your job and find another job that might even pay you more. So companies are happy to pay more to keep good people, and employees are getting more and more power. That's the power of example of why Dallas may start to have an impact on startups going forward. So I'm starting to talk to companies now that are saying, rather than creating an LLC or subchapter S corporation and incorporating it Delaware, I'm going to create a company as a DAO. Allow me to quickly explain what the DAO is. DAO theory describes market trends and how they typically behave. It provides signals that can be used to identify the primary market trend. The primary market trend is then used to make trading decisions. We can also apply the Dow theory to the crypto market. According to the Dow theory, the market considers everything during its pricing. The current asset prices are a reflection of all existing prior and upcoming details of the stock. This means that a market analyst can focus on the price of the coin rather than every single variable that moves the price of the coin. Crypto markets go up and down in particular patterns, and the market is never stable. So, being able to recognize the patterns of the market makes it possible to predict market behavior. As I was saying before, I'm definitely going to pay my employees good wages because they need to be compensated, which is part of the Dow theory. But also, I want them to participate more in how to govern the company, so they be given tokens so they can vote on different business decisions. That's the future of DAOs, where it may be a better way to do a startup that allows your employees to be more involved and contribute ideas and make it more democratic. So, if you start to see some companies that achieve success that way, we'll see more and more DAOs take place. It's only right as an investor to eat, sleep, and drink your business 24/7. That's because I made so many mistakes when I started as an investor. I didn't take personal looks at things, and it affected my investments. Now, the crypto stuff is exciting, but I prefer it more for business applications. Creating content around it is going to be great. I'd like to see college textbooks done as an NFT, where you can take like a Kindle reader and make it part of an NFT. So you take L1 class in law school and all other courses, or you take your medicine courses, and when you're done with your semester, you turn them into an NFT and sell them, and the author and publisher get their share, and you don't have to go through the strenuous process of buying a new or a used one. So why will you spend $400 for a textbook that you'll only use once? There are a lot of applications in business. We talked about DAO and how they may change how our businesses are started. I think the distributed aspect of approval, right, the centralization aspect of it, things like inductance approvals. Currently, insurance is very vertically integrated. I mean, you buy your insurance policy or you already have it. Then you have to go through your pre-approval. And if they give you a pre-approval, you can go to their boss or someone even more superior. So the better way to do it would be a decentralized manner as part of a DAO where you've got 1,000 workers who are trained on how to approve and disapprove an insurance pre-claim. And you just let them vote. So if 51% say yes, then it's approved, and if not, it's canceled. We can overemphasize the importance of DAO in business. It would really go a long way to help our industry. So that's it for today. Make sure you follow all the tips and clues I mentioned, and with consistency, you'll understand the market and make more money from it. If you have any questions, don't hesitate to ask in the comments section. Don't forget to hit the like button and subscribe. See you in the next video.